JD.com enters the food delivery space. What exactly is the impact going to be on Alibaba and Tencent through their investment in Meituan? That's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here an interesting piece of news came out on the weekend where JD.com is considering on-demand food delivery in China. And so that would make it face off against Alibaba and Meituan. And so of course you guys know Alibaba owns the food platform Ali.me. And so that's a company that's been challenged in the recent environment, and I'll talk about that a little bit more. You can see here that JD Retail CEO Xin Lun said that the company has considered and explored a food delivery business that would draw on its majority stake on-demand delivery operator Dada Nexus. And Dada has strong capabilities in same-city delivery. Now here's the thing, next-day and same-day product delivery versus ready-made food delivery are completely different businesses, which is what I highlight at this point. And so I think this is a real tough business for JD.com to break into if they're going to start servicing restaurants as well, like Ali.me and Meituan do. And you can see here that the market is extremely concentrated, but it's largely owned by two entrants. So Meituan controls approximately 70% of the market, and Ali.me controls approximately 30% of the market. And just an FYI, if you guys saw my Alibaba Investor Day analysis, you can see that Meituan is running away from Ali.me. They're completely owning this market and taking more and more market share. Now, Ali.me is growing every year, don't get me wrong, but as the market continues to expand, Meituan is capturing more and more of it. So I think Tencent, through their investment in Meituan, ultimately win in this space. But the question is this space one that you want to be competing in? And the reason why I bring that up is because many times on this channel, I've brought up the fact that the CCP gets involved in this business and it's causing havoc for the company. So you can see here on February 18th, Meituan's shares actually tumbled after the CCP asked the delivery platforms to cut their fees. And so Meituan's shares actually dropped almost 20% on that news. You can see that Meituan is actually expected to report a wider net loss as a result of the CCP crackdown in addition to the lockdowns. And so that you see that I point out is something that should never happen. You shouldn't be in a situation where you're losing money or making a wider loss because the government has intervened and forced you to bring down your prices, or at least asked you to bring down your prices, but you know if you don't comply, they're going to force you anyways. So the question is, will this really impact Ali.me or Alibaba as a whole? And my response is I don't think so, and here's why. You can see that Alibaba is really focusing in on food and groceries in their sort of online growth space as part of their next generation strategies. And home delivery seems to be part of this market that's less in the eye of CCP. And so it's also a fast growing, emerging online business. So one of the ways you can sort of get away from the eye of the CCP is focus more on home delivery, but that's something that JD.com would also focus in on. But Alibaba has such a huge foothold into it that I think that they will be okay. But with that, there's nothing special in the sauce there. I think JD.com could catch up there. So what does Alibaba do that's different? Alibaba's largest strength is the omni-channel approach to food delivery, but just delivery in general, for value to premium and less time sensitive to more time sensitive customers. And I think it's something that's very difficult to compete against, and I think Alibaba's wins in this space. So for example, if you want less time sensitive but extremely good value for your money, you're going to go after the Taobao Deals app. However, if you're more time sensitive, like you can't even wait for delivery, or for example, if you're walking to work and you want to grab a coffee on the way to work, well, you can go to one of the Fresh Hippo outlets where they have lockers available for you to just grab your coffee or your muffin or whatever as you're walking into work. So they sort of cover the whole gambit here. And I think that's the brilliance with Alibaba. These are the sharks they continue to throw into their moats, and crocodiles or whatever else you want to throw in their moat. They have this omni-channel strategy where everything is sort of working together to make the sum of all the parts greater. And I think that's the real reason why Alibaba wins overall. That doesn't mean that JD.com doesn't win. It doesn't mean that Tencent also doesn't win with their Meituan investment. I think a rising tide will raise all boats, but I think Alibaba is not just growing with the market, but they're also becoming more competitive. And that's the reason why I like Alibaba more than any other investment in China. Now, where exactly does Alibaba stack with respect to their valuation? Well, you can see here from the companies that are following, this is a tracker that the Patreons get access to. You can see that Alibaba is trading at approximately 34% of their intrinsic value, where the intrinsic price is around $300 per share, and the current share price is hovering around $100 per share. And so how do you get access to that tracker? Well, you can get access to it at the lower tier for the Patreons. And once again, like I always say to you guys, there's absolutely no risk to you, because if you decide to subscribe to the Patreon and then you decide that it's not for you, no problem. You can just message me in the app and say that, hey, I tried it, it's not for me, and I'll completely refund your first full month. So there's absolutely no risk for you to trying it out. And the reason why I offer that is because I absolutely believe in the research and the effort that's put into this tracker and the models that accompany it. Now, one thing that's very interesting is that the US housing market is starting to crash. Now, the prices for homes are still going up. However, I predict that the prices are actually going to come way down. And I talk about all of that in this video right here.